It's over. So we have a Fed meeting on Wednesday, 2 o'clock Eastern time. Pretty much, baked in the cake. They're going to raise interest rates a half a point, but it's just, I don't want to get into the weeds, but they're so far behind. We have inflation at the last CPI of 8.5%. Producer prices were the highest they've ever been at 11.2%. And we've got a Fed funds rate of, a quarter of a point, 0.25%. So they've got, 16 rate hikes, before they can even catch up. And, I think this dislocation is going to create a dislocation in the markets if it's not already happening. This is gold. Gold's crashing right now. Higher interest rates are kryptonite to gold. I put on some gold positions on Friday again. I'm kind of making a fortune on my spot gold account. I was kind of just looking at, I remember I was actually working in the World Trade Center, those buildings that were taken down in 2001. I was working for Bridgewater and Associates, that $175 billion hedge fund. And I was there for Black Monday, which was October 1987. I hate to age myself as much, but I was there. But the thing is, it was like the preceding Friday, there was a mini crash. And then just opened on Monday. And it was the biggest down day ever in the history of the market in percentage terms. It was down 500 points, which represented about, 22.5%. It was a bigger move than the Depression. And it was really a function of all of these bots, these algorithms, which to me, currently represents an enormous, clear and present danger in the markets, because all of these ETFs are not managed by managers who are looking at Apple has this balance sheet, it has $100 billion in cash, it's worth this much money. The bots don't see that. They just see prices and they're just chasing lower prices, and you can get a fat finger and all of a sudden a panic, and then these bots just keep chasing those prices. So I think, this is setting up for all kinds of stuff. I mean, I listen all day long and people saying it's such a buying opportunity, and I don't know what these guys are smoking, but to me, this is just setting up for a huge rollover. Dow Jones is down 10% this year. S&P, I think, is down 14%. I heard a statistic that this is the worst start to the year for the S&P since 1939. So we're starting to get some really crazy statistics. NASDAQ was the worst month since 2008. The bond market was the worst month, I think, ever, or possibly since going back to the 70s. User growth in Amazon and Netflix and Facebook were the slowest in 20 years. So you're starting to get some really frightening statistics. And so to me, I keep an eye on the fundamentals, and when they align with the technicals, I think you've got a setup for a real problem here. Now, everybody's saying, well, the S&P is going to go to 4,000 level. Well, I think it's just, rolling over now. It's not going to stop at 4,000. This is the S&P, and we're just starting. All this selling, all this fear, all this thing, we've just come to the starting gates. Horse hasn't even left the barn yet. And so, it's possible maybe we get another shoulder here, whatever. But, it's going to be a crazy week, so the Fed's going to raise interest rates, and, you may even get a rally. But, I just sell into everything. Any good rally, just sell into. So this is what I'm looking at the S&P. It's this large ascending broadening. You can see just last week we snuck under it for the first time. typically, you get going and maybe you have a bit of a retest, maybe not. So to me, the S&P projects all the way down to this 3,600 level. Everybody's talking about 4,000, maybe 38. I don't know. Once this thing gets going, I don't know what there's going to be to stop it. I said a couple of weeks ago, and I'm always hesitant to kind of say these things. I said this many months ago in one of my weekly newsletters that I thought we were setting up for investors to lose trillions of dollars in the market. Trillions, pensions, IRAs, all this stuff. And people think they're insulated. They buy into this Warren Buffett buy and hold thing. America's great. America always comes back. But there's also, history is littered with these lost decades where literally you have zero return between 2000 and 2009, between 1965 and 1982, between 1927 and 1942. You had zero return. So everybody says, well, if you go back to like 1908, the S&P's averaged like 8%. That's the average. I mean, you got to count the 90s and the last couple of years where you've got 30% returns thrown in there. But then there's a whole periods of time where you just have dead money, where, it goes nowhere. And so I think we're very much in one of those periods where we're going to have dead money or a lot of lost money. This is the definition of dead money. Amazon, where you just, you've been a patient, buy and hold, do the right thing investor. You came in here and, August of 2020, 2 years later, you're down 20%. So you've been holding through this and all you've got for your time and investment is that you're down 20% currently. And you probably got 30% to go. So, it's a very difficult environment. And certainly if you're buy and hold, I've been searching and racking my brain. I've got all kinds of money just lying in the bank. Pisses me off. It's just earning 0% return. But I'd rather get 0% return than lose 50% in the market on my stable money. So it's a difficult environment. So this is, if you're not comfortable going short the market, I think, being in cash is not a bad thing for the next 6 months.
So you can see, 45, it's 1.3 million.
$1.3 million short.
So popped out a profit for 118,000 there.
So you can see how this is going crazy now. You can see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.